savage. Moneymane and the thing of a T and playing no games. Should I already know my name when I speak NCC flame. Got my YouTube poppin', man. Like, subscribing, everything in between. You already know Moneymane. Moneymane. You already know I have it. My savage. We back with another stock video. Before we get into it, you already know what you need to do. I need y'all to spam that like button. Give me the 200 likes. Like, subscribe, and share. Tell a friend about the Moneymane. You already know. And no, I'm not a financial advisor. I'm not telling you to buy, sell, or trade. This just for entertainment purposes only. Now, y'all see the title. Y'all see the thumbnail, my savages. Amazon, Google, and Meta, or better known as Facebook. But we're going to get into that in a minute. You know what I'm saying? But right now, no, this is not my portfolio account. I wish I was up and had $93,453.24 in my account and invested. But I ain't got to that point yet. You know what I'm saying? But we trying to get there. And this is the reason why I'm making these videos, man. Because y'all, we've been on the stocks. I mean, we've been on the crypto. Now we want to get in the stock. We want to diversify the portfolio because you can't have most of your money in the crypto because, you know, crypto swings 20% up or down easily in a day. Stock market right now, what's going on, maybe the same because some of these big time companies we about to look at right now have plummeted their price, I mean, for the stock, and it's time to get in. Just like Kenny Gray, Stock Mo, and Uncle Larry, Stock Up with Larry Jones, they be talking about, who I watch, they be talking about the transfer of wealth. You know what I'm saying? All these billionaires and millionaires got all this money in all the stock market, and they got millions or hundreds of thousands of stocks of these big companies or companies in general, and they are selling off. And it's time for the retail investors, that's us, to get a piece of that pie. You know what I'm saying? So why not? Just got paid. I'm about to drop some on there. I'm about to get it. You know what I'm saying? But right now, like I said, this is a simulator on Investopedia.com. Y'all can do this and play with it if you don't know, if you scared or you just learning how to invest in the stock market. You can go to this Investopedia simulator and they'll give you 100,000 and you can buy whatever stocks you want to buy and see or track it however you want to do. You know what I'm saying? But this is a good informational tool that I find. I'm glad I found it, man. You know what I'm saying? So as y'all can see right now, the annual return is -80, 75%. But I bought these stocks like 3 weeks ago now. Going on 3 weeks ago, I bought these stocks at a low point in the market. So I thought, but y'all can see that it done went lower. But some of those, I do have 2 stock options that had lost me money too. But I'm still learning how to do that. I can't tell y'all about that. But the ones we're gonna talk about right now, Amazon shares plummet after mixed Q3 earnings report. Now that's what we need to look at. You know what I'm saying? We're gonna talk about earnings per share. That's EPS. When you see EPS, that's earnings per share. That means they beat it. Reported value point 28 cents. But they predicted 22 cents. But they beat it. But Amazon missed on the revenue and the Amazon Web Services revenue, AWS. If you see that on Amazon, that's what it is. Amazon Web Services is like a cloud computing business that's going on. But you know, they store stuff for businesses and all that. But they missed on both of those, on their regular revenue and the AWS. So that's a reason why Amazon is down, along with Google and Meta. We're gonna look at those too. The main reason is because of the earnings, man. The earnings. They losing money. They not making enough money. They losing money. And people that's in it are getting scared. Because what's going on in the world, well, they say we was in a soft recession, but we're going to go into a hard recession in 2023. So these prices of these stocks that y'all see, they might go down even farther. But that's why you dollar cost average. That means you buy a little bit. You don't go in deep in all at one time. You buy a little bit, watch it. If it goes up and you want to buy a little bit, go ahead and buy a little bit. If you don't, you just sit and watch. But if it goes down, that's when you strike again. You buy a little bit, or whatever you're willing to lose, or whatever your budget is. You buy a little bit at a time. You don't dive deep in this moment of time, because nobody knows really where the bottom is. They can predict it, but at the same time, nobody really knows. But Amazon right now is $103.41. Now, if y'all follow the stock market already, y'all already knew Amazon was past $2,000, $3,000 for one stock at one point. Now, that ain't saying, I tell you what happened now. I know some of y'all, how's the 103 right now, Moneymane? When it was 3,000. Listen, they did a stock split, a 20 for 1. So every one stock of Amazon that was $3,000, $2,000, they became 20. So people that already owned Amazon, if they only had one stock, they ended up with 20 stocks. That's how a stock split worked. 20 for 1. Same thing what Google did with their stock. They did a 20 for 1, the same thing. They did all these during the summer, June, July. If you missed it, you can still get in, because at the time I got in when Amazon did theirs, it was like 185, and then you see it say 103. Yeah, I'm losing money, but like I said, dollar cost average in. Now the PE ratio 101. That's high. That's high. That's what you need to look at, the PE ratio. The lower, the better. You know what I'm saying? But the PE ratio is high. But when the PE ratio is high, that means you expect future growth in the company. And y'all already know what Amazon is. The top U.S. e-commerce retailer in the U.S., man. Almost the world, if you didn't count China's Alibaba. I think I said it right. But they about the same thing what Amazon is, but just in China. You know what I'm saying? But if you need something and you need to look up something, where you go? Amazon. Why y'all think they got that arrow under their logo right there? And then the arrow go from A to Z. I did a project on this in college, man. So A to Z. They draw that arrow from A to Z because Amazon got everything from A to Z. That's why they do that. Now I'm telling y'all, man, look here. Look here. Back in August the 16th, Amazon was $144.80. Now you can get it on a discount for $103.41. And then it could possibly go lower, like I said, when we get into the recession. Yeah, we headed to a recession. Investopedia has all the information that you need. Fundamental data. You got the chart and you got the news all on this one website. Not promoting it, but you can get it and look at it and do your own research, because you're supposed to do that anyway. You know what I'm saying? But Amazon, like I said, man, missed the earnings. Same thing with Google. Google missed their earnings. Now, I done scooped up one of these, man, and I got in. I only got one. I got it at 92. And you see it's 96.29 right now, so I'm already green with it. But like I said, I only got one. Now, like I said, put in what money you in, you willing to lose in this thing. But hey, big discount on Google. Look at this. 141. Now it's all the way down to 96.29. I'm telling y'all, man. August 122. Look at that. Look what's going on, man. PE ratio 1856. Goodbye. Value buy for a company that ain't going nowhere. Everybody go on their computer and use Google. Everybody. Everybody. Not alone the phones and what in the VRs and everything else they got. And everything else they own. Just know Alphabet Incorporated, it is the parent company of Google, and you know everything else that follows with Google. So, like I said, a good buy, man. It's a time to pounce, man. It's a time to pounce and transfer that wealth so you can get in on some of these stocks. Like I said, I ain't no financial advisor. I ain't telling you to buy, sell, or trade. You do what you want to do. It's your money. It's your portfolio. It's your account. You can do whatever you want to do. You ain't got to buy none of these stocks. I'm just telling you all what I'm doing. Not a financial advisor, just for entertainment purposes only. Google. Down. Get it. Not financial advice. Meta. Now look at this, man. Everybody know Facebook. They changed their name to Meta because they were trying to move to the metaverse. That's where Facebook, Meta messed up a little bit. They putting more money into the metaverse. I know why. And a lot of us crypto heads know why too. Because when the metaverse take off, Meta or Facebook trying to be the first one. They trying to be the big dog in the game. That's why they put so much money into it, trying to get ahead of everybody else because they understand that the metaverse is part of the future. You know what I'm saying? But the revenue, as you can see right here, 27.7 billion versus 27.4 billion. So they met their revenue, but the earnings per share, that's what they missed. $1.64 versus $1.89 expected. They missed on their earnings per share, EPS, daily activity users. They up on that, but like mainly it's the earnings, man. That's what every stock or investor look at is the earnings, man. That's all they looking at. So they missed on the earnings, and then they lost like $9 billion in the metaverse sector. They lost like $9 billion in that, and that's the man that created Facebook. You didn't know, but they lost like $9 billion in the metaverse sector. What they trying to do, and you know they shifting. They more focused on the metaverse than their core platform, Facebook, where they gain out most of their revenue. You know what I'm saying? So that's what a lot of investors are concerned about, because if you looking at this right here, man, I don't even got to go back that far. As you can see right here, October 25th. Depends on you watching this video, man. I know it's on the weekend, but the stock market closed. But October 25th, Meta was $136.27. It's 99. 99 today. It was lower than that 2 days ago. 98.79. Look at that big dip, man. And if you believe in this company and know these are some of the top companies in the world and in the US, come on, man. PE ratio is 933. That's the best value out of all these stocks that I just showed you. Amazon, Google, Meta is the best value, the most bang for your buck. PE ratio is they gotta make $9 for you to make $1. For every $9, you earn $1 from Facebook. That's what the PE ratio is. Like I said, the lower, the better. The lower the PE ratio, the better. Look at that, man. 933. Meta, man. Everybody, a lot of people on Meta, on Facebook. But like I said, they trying to be the first to get in their metaverse. So when they be the first to get in their metaverse, hey, they gonna get all the money. Then if you got some stock in it, you go get a check. Come on, man. Come on, man. I'm telling y'all, man. I'm telling y'all. Like I said, this is a simulator right here. I'm just losing on a lot of these, but we'll go over those. But like I said, man, if y'all want to learn how to use this or know how to buy, sell, trade, or swap, not swap, but trade stocks, man, leave a comment down below. We got the Discord. Shout out to the all my savages in the Discord, Real True Savages. Link down in the description if you want to join that. Link down in the description if you want to buy the merch. You know what I'm saying? But it is what it is. Y'all already know what time it is. My savage, stop playing with me. My savage. Moneymane and the thing of a T and playing no games. Should I already know my name when I speak NCC flame. Got my YouTube popping, man. Like, subscribing, everything in between. You already know Moneymane. You already know.